Hey everybody, welcome to the Thursday Financial Thing live stream here on YouTube. Hope you guys are having a great week, a great start to your 2022. Imagine it is almost at the end of January. Crazy how things go, crazy how fast time flies. But we're having an interesting start to 2022 with the financial markets. It kind of feels like the stock market still just wants to propel higher. And as long as the bad economic news keeps coming out, which we still continue to see, then it seems like the stock market will want to run higher. And of course, there will be a correction eventually, just nobody really knows when. That's the big unknown. The crystal ball has to come out for that one, but never seems to tell me. Just always stays very opaque. But anyway, yeah, welcome to everybody. If you didn't check out last Thursday's stream on the archive, we had Cormac Leach from Axia Funda, which is a very interesting one-on-one Q&A interview that I found to be really good. But what are we going to talk about today? First of all, hit the thumbs up if you can. Helps me out a ton. Takes you literally half a second of pressing power. Helps with the YouTube algorithm. But we're going to be talking about some peer-to-peer lending news, some regulations that the FCA looks like it will be proposing for not only peer-to-peer lending, but also cryptocurrency advertising. And we're going to take a look at the Trading 212 portfolio, a quick look at that, look at some cryptocurrency news, and we're going to talk about crypto staking now. For those of you that are out there looking for ways to get yield, because if you go to a place like Ford Bank, you are going to get about 0.6%, which is up from 0.5%, but obviously just very little upside in the savings account world. As we know, we have limited choices. We can do peer-to-peer lending. We can do the stock market. Bonds are not going to yield as much of anything. It looks like this year, I would say, is probably going to be another 0 year of bond growth as far as if you have a bond fund. Again, we really don't know for sure, but the interest rates will probably be very small if they are risen at all, very incremental. So that leads us to the question, where can we get more yield? And there are some ways in the cryptocurrency market. If you do hold cryptocurrency or something you're interested in, you believe in certain projects long term, you can hold those coins and you can stake them for returns of pretty decent APR percentages that you get paid actually in that currency. So I'm going to show you a couple of things on that side that I've been looking at myself and that I find very interesting. Quick hi to everybody in the stream. Invest22 is here, and Akichap in Accrington. I was actually looking at Accrington on the map, a possible piece of property over there. I think it's near Lancashire, if I'm not wrong. So I thought of you this week, Akichap. Mike Powell is here in Southampton, of course. Peter Vince in Leatherhead. It's very nippy. For people who are not from the UK, that means cold, nippy. And cold in London. Paul New is in a chilly Stockport. We have Hilary Head, Duke in Nottingham. You sound like a very regal person. If I was wondering who Hilary Head Duke was, I'd be thinking you were, in some kind of a castle somewhere in Scotland. Hopefully that's true. Stephen Hale in Nottingham. Stephen was one of the lucky winners of the holiday gift giveaway. So congrats, Stephen. Paul Bagworth is here in Kenilworth. Double D. Dave Dawson in Staffordshire. Philip Walters. Milton Keynes. Alan Stratford. Another winner of our holiday giveaway. So it's nice to see that some of the viewers won. Cold in Worcestershire. Brian is here in Woburn. John Day in Nottingham. Third denizen. I don't know what that means. Some kind of code word. Mark Mason is here. Mark, hi, welcome to the stream. Annabelle Nyron from looks like Spain. And Alan, no, I have not found out who LoanPad's 8th lending partner is, but I will text Louis right now. I'm going to do it You know what? We'll do it right here, live on the stream. Where are you, Louis? Hold on. Hi, Louis, can you tell me who the 8th lending partner is? Question mark, just curious. There you go. As soon as I find out, I will let you know. And yeah, so let's attack right into the information today and see what's going on in the peer-to-peer lending news. Let's see here, share my screen with you. As I do, I gotta close that out. Hold on, let's close that out. Totally unprepared as usual. Let's see if my Zoom is working today. For some reason, I don't know, the Zoom is not working, but nonetheless, you can still see it. Here we go. The House Crowd's administration extended to 2023. No surprise here, Quantuma. I always want to say Quantum, who is the administrator for the House Crowd, one of the joint administrators, saying that they will be extending their administration deadline until the 24th of February 2023. We are coming up on the 1-year anniversary of the House Crowd administration. And, no surprise here. I think we all know that these administrations really just take a long time, and this one is going to be the same. They started on the 26th of February last year, and in a report that they recently released, which covers between the 24th of February and the 23rd of August 2021, it showed the administrators have racked up £421,995 in fees from 1,366 hours of work since the platform collapsed, and they project a further £447,532, which will be coming up towards, close to £900,000. I expect that to go well over $1 million, and for that administration to continue probably on to 2025 or 2026. But you know how I feel about these administrations. It's really a no-win situation for investors, unfortunately. It is what it is. So that is continuing on. And by the way, if you are a House Crowd investor and you want to look at what's going on through these reports, you can actually find them at Companies House. You zoom in here. If you go company number 07893395, you can look at the filing history here and see the administrator's progress reports right here, which was released on the 28th of September. And here is that notice of extension period of administration. So these administrators will always file, well, they're supposed to file at Companies House, and you can read the information there or go to the website of the company that you have invested through. You can see here too, this is in the Companies House report, the fees schedules here and how much they're racking up, which of course is coming out of the total amounts of money that they're able to receive through the administration. An average hourly rate of 309 quid an hour. So not bad to be Quantuma, not so good to be an investor. Also, you can join the House Crowd Investors Group. They have a website here. It is thcmoneyrecovery.wixsite.com, and that gives you information about the Investors Group, which is representing the investors of the House Crowd. And honestly, I just don't really see a really good ending to this House Crowd situation. The more I look into the loans that have been written, the more it seems that the loans just really weren't very good. And, unfortunately, it's just part of the risk of sometimes peer-to-peer lending. And it's really sad because the sector, while the strong companies seem to be doing well, a lot of people have gotten hurt by poor decision-making of some of these companies, like obviously Collateral, which is alleged fraud going on, Lendy, alleged fraud. I don't know about the House Crowd, but just poor loan selection, Funding Secure, poor loan selection, Wellesley and Company, poor loan selection. yeah, and what we need to do is flush out those companies out of the system and move on. And, at the very least, what you can do is write some of those losses off against your taxes. So I'm not a tax advisor, but you are able to do that. In some cases, talk to your accountant. Hopefully we can just pick the better companies in the future. What else we got? European markets open to UK peer-to-peer lenders under new EU regulations. So as the UK, the FCA sort of clamps down harder on what it considers high-risk investments like peer-to-peer lending and also cryptocurrency, the European market and the EU has regulation which is going to be more friendly to the UK peer-to-peer lending companies who may or may not want to expand into Europe. So I say that's a pretty positive move because the EU seems to be more peer-to-peer friendly at the moment than the UK, and there's a lot of investment appetite over there. So if the UK peer-to-peer lending companies really struggle to bring in new customers, and that could well be a part of the new FCA regulations that will probably be implemented soon, then the EU gives them a new place to look for business, which is good for them, generally good for the sector in the UK as a whole. So, the more business they can bring in, the better for us. So that is going on at the moment through the EU, and they have already, the EU member state conduct authorities have published their licensing requirements as they want to welcome these UK companies to do business in the EU. This is interesting. Zopa savings accounts top £1 billion in deposits. Now, for everybody that was a Zopa peer-to-peer investor, you'll know that Zopa went into the banking business. This is where they decided to focus on. They thought it was going to be more profitable for them. Maybe peer-to-peer lending for them wasn't sustainable. So £1 billion in deposits. What's very, very interesting is it issued more than 200,000 credit cards, becoming a top 5 credit card issuer in the UK. It's tripled its revenue per customer. That's a pretty big growth that they've had pretty fast in the banking sector. And the crazy thing is that Zopa's savings rates are pretty poor. It's not like they are getting... Oh, there's the zoom. They are not giving away a ton of interest. You could lock up your money in Zopa for 1.75%. That's going to lock your money up for 5 years. 1.75% a year. So you're getting smashed by inflation by, I would say, 3.25% probably. So you're going to be losing 3.25% to inflation putting your money in Zopa. And definitely not an attractive rate of 5 years. If you were going to do anything, you wanted to stick some money away, 1.35%. But again, not really attractive when you can put your money into Ford or Marcus for 0.6, may inch a little bit higher to 0.7 in the upcoming couple of months. I don't really see much advantage of locking away money at this price, especially when you can get rates of 4% and loan pad. Of course, obviously this is FSCS protected, loan pad isn't, but at these rates you're really just losing money to inflation. So Zopa has grown very, very quickly. This is an interesting article. What will peer-to-peer hold for 2022? Some different thoughts on this. And now what I find funny is that these are all peer-to-peer lending, usually CEOs, heads of companies. Of course, they're not going to say anything negatively. Oh, peer-to-peer is going to suck for 2022. Which is not what they say. David Turner, Chief Exec of Investment Fund. I'd like to actually get him on the live stream. I think that would be fun. But he says 2022 will be a very exciting year, the most exciting since the sector formed. I don't know if I would agree with that. It'll be a year when peer-to-peer truly bursts into the consciousness and gets taken seriously as a generally more attractive model than the banks and traditional players. I think in order for that to happen, David, we're going to have to get rid of these companies that are in administration, because as long as those continue to sort of stink up the industry, I don't know that peer-to-peer lending is going to be taken as seriously as it could be if those companies were gone and those administrations were taken care of. This year will be a year of accelerated and material volumes of growth. Strong credit performance is starting to become more visible. Yes, I would agree with that. Neil Faulkner, chief exec of Fourth Way, the website. In 2022, we'll see some delayed pandemic defaults rise. I think that's really true. I think we'll definitely see some increases in defaults in 2022. Neil says the industry will continue to grow. Bruce Davis, co-founder of Abundance, this year will be pivotal for peer-to-peer and crowdfunding. I totally agree with that, Bruce. I think 2022 is a very, very important year. Peer-to-peer lending has fought hard to get the regulator to recognize the benefits which the sector provides within the wider financial services industry. Nicola Horlick, CEO of Money & Co. It's becoming harder to find good quality SMEs. Thank you for telling the truth, Nicola. I think that's very, very true. It's very difficult because there have been so many government-backed loans made by the big banks. That means we'll be focusing on specialty lending, litigation, and music. I think the lack of good quality borrowers will place a constraint on growth for the overall sector. And then Narinder, chief executive of Kuflink, doesn't think there'll be any new entrants in the space. I disagree with that. Narinder, respectively, I think there will be a couple of entrants into the space in 2022. Interesting to hear their views. Estate Gurus eyes UK March launch. So this is a European peer-to-peer lending company that is planning to launch in the UK of March this year. That's interesting. So if you're looking for another place to put money, this could be one place. UK managing director at Estate Guru, Ross Gandy, has his sights set on deploying £70 million in loans. Don't really know much about Estate Guru. Kuflink profits in 2021. They reported £295,191 in the year ending 30th of June 2021. So they've had a bit of an uptick of about £50,000 in profits. They've also seen a large rise in turnover to more than 2.4 million. So more turnover, a little bit higher in profit, but they are going through purely organic growth. And I think 2022 will be a good year for Kuflink. By June 2021, 135 million had been invested on the Kuflink platform, up from 83 million pounds a year earlier. Kuflink moving in the right direction. House of Lords reports that there is no case for a digital pound. This is why our government is always 3 steps behind everything. They say there is no case for a digital pound. There's no convincing case that they say it's I like this line here. We concluded that the idea was a solution in search of a problem. Yeah. I mean, try sending money across borders quickly. That could be your case right there for the case of a digital pound, being able to send money like in an instant, which I find to be one of the biggest benefits that could be offered for a digital pound. But the House of Lords, these elderly gentlemen who obviously know more than we do, says there is no case for that. I think they will change their mind on that. FCA proposals to strengthen financial promotion rules. The FCA is planning to ban the promotion of investor incentives. So understand this, all these cashback offers that you currently see, I believe will be finished. And also says such as new joiners or refer a friend bonuses, and the improvement of risk warnings on ads will be implemented to ensure that approve and communicate financial marketing have relevant expertise and understanding of the investments being offered. So if you want to get your cash back on any new investments, you better do it soon, because the FCA is going to shut that down, which is unfortunate. I don't personally think there's anything wrong with providing somebody an incentive to try out a company that maybe they've not had experience with, but I do agree with the advertising. Obviously the risk needs to be clearly explained, which is difficult. The FCA also outlined its plans to crack down on the marketing of crypto assets in preparation for the Treasury bringing their promotion under the FCA's remit. It plans to categorize crypto as restricted mass market investments, meaning that only restricted high net worth or sophisticated investors would be able to respond to crypto asset financial promotions. Crypto ads will have to follow FCA rules and be clear, fair, and not misleading. Now, I am all for clear advertising. We certainly don't want anybody to be misled. And I think that's generally a positive move. But the problem that I have with the FCA, and if you're listening, FCA, which I'm sure you are, because I know you're tuned in every week, the problem that I have is this is not an equal rule across the financial services industry. So, for instance, if we go to Trading 212 and we can pick from an array of thousands of different stocks, and if we look, for instance, by price, let's go to some of the lower priced stocks. There's thousands of them here that you have no idea what they are. I mean, some of them are less than a penny. So on my watch list, I just happen to pick out a couple here. I can invest in Boqi. I have no idea what it is. Boqi is a Chinese-based company engaging in operating an online pet-focused platform. So I can buy Boqi shares right here in Trading 212, which is regulated by the FCA, with a market cap of a very paltry $63.15 million, which is less than a lot of cryptocurrencies out there. There is no warning on here about what I'm investing in, that it is super high risk. Doesn't really tell me much about the company. There's nothing to stop an uninformed investor who is probably classified as non-sophisticated, because anybody can sign up for a trading account. It's very easy. You don't have to go through the rigmaroles. You just have to go through the verification process. I can invest in Iconic Labs, a UK company, Media Data Info, with a market cap of just £5.98 million and apparently 0 employees. I don't know how many employees they have. With a net income of minus £2.39 million a year and a profit margin of minus 2,227%. Again, no warning about what I'm investing in. And this is the problem that I have with these FCA rules, is they're not equally fair across the financial markets, because the stock market is a protected area, protected by the JP Morgans and the big banks, protected by Hargreaves Lansdown, Barclays. So we have two different sets of rules on what is okay, what is not okay. And I would be all for, say, crypto assets being shut down to the mainstream if things like these very risky, what I consider penny stocks, would it be shut down too? Or to have the same kind of warnings that when I buy something like Iconic Labs, that I have a warning right here about what I'm going to do. I don't have any money in my account to buy it, but there's no warning here. I could put in 10 grand if I wanted on this silly little stock. I don't know if it's good or not. I mean, I have no idea. I'm not saying anything bad about this company, but Bluebird Merchant at 2p. I can buy as much as I want. I put in £1 million if there's enough liquidity out there. But I'm not going to be faced with any type of warning. And that's the problem that I have with these FCA rules. They're not equal. And that's because the industry of the stock market is protected to serve the rich and the wealthy, while things like cryptocurrency, and you could say peer-to-peer lending, because it gives regular investors a chance to gain yield that they wouldn't normally have. And in the stock market, that's very difficult. It's very difficult to come in here, pick out, look at this list of stocks. We got thousands and thousands and thousands and thousands. It's not easy to pick out stocks that are going to actually positive yield during the year, because it's volatile, just like cryptocurrency. If you think the stocks aren't volatile, I mean, look at this one right here, this Finio, plus 13% today. If you can get 13% on a day in a stock, it's volatile. So we have all these lists of thousands and thousands of stocks, but as investors, we don't know which are good, which are bad. So FCA, I would like to have some fair rules that if you're going to put this type of regulation on things like cryptocurrency and peer-to-peer lending, and I understand you want to protect investors, good, protect me. I didn't get protected in Lendy. I didn't get protected in collateral. But protect me, yes, of course, but make it equal. So that's my rant for the day on that. Now, you can see here Prop-T, which is a European property investment platform, has plans to go for FCA regulation in the UK, but they've decided to put that on hold because of plans over cryptocurrency uncertainty. So they're waiting to see what the UK regulator is going to come up with, a clean legal framework regarding crypto, and then they'll submit their application. I think this is because this company wants to invest, maybe give people the opportunity to invest in things like the metaverse as far as land, NFTs and stuff like that. So they're going to put that on hold. Let's take a look at the trading 212 portfolio. We were over 16,000 today at one point. We had a bit of a bump, and we've taken a bit of a pullback. And one of the investments, what I wanted to show you, Lloyd's Bank has been on an absolute tear, which is making me obviously regret selling off as much as I did. It's up 107% now, which I'm really surprised about. I didn't think it was going to, look, it got to 53.5p at one point. I didn't think it was going to move much past 50, but it's been on an absolute tear, doing well. And the oils, of course, this week have been pretty good. Now look at this one, Too Low Oil, which I know I've been saying was pretty much stinking out the portfolio there. It was about 20% in the red just a few weeks ago, and now we're in the green, 9.56%. So we've seen almost a 30% swing from the red up to the green on that stock, UK oil and gas exploration. And then Vermilion is now up 100%, which is insane. This is a Canadian company. I think possibly there's some good Canadian oil companies out there that can protect you a little bit from maybe the regulations that might come into the US. Who knows what the government's going to pull when it comes to oil. But on a whole, the portfolio has actually fared pretty good, considering that we've got a couple of bad ones here in the crypto mining shares of CleanSpark and Hut 8, and heavily in the red. CleanSpark minus 52%. But I think as the crypto market starts to rebound, these shares will come back inevitably. And then Comstock Resources, which this one's been a bit of a disappointment, down 23%. It's an independent natural gas producer, which I thought would be definitely doing well at the moment, and it's not. And then Palantir, look at this, minus 40%. So this has been a bad one. So on the whole, considering we've got these bad ones that are in the negative so much, the portfolio has actually done really well to be a little bit under £16,000. If we'd have not had these bad ones, of course, then we'd be doing much better. But as part of individual trying to buy and sell individual stocks is very, very difficult. Let's see what else we got here. Let me zoom out on this. Oops. Oh, hang on. I want to show you this. This is a very interesting statistic. These are the world's most visited finance websites in December 2021. You see PayPal.com, CoinMarket.com. This is in the entire world. CoinMarket.com, which is the crypto website. We got TradingView, which is stock trading charts. Then Chase.com, which is a huge US bank. Wells Fargo, Bank of America on here. But look at the number 2. We got number 6, Binance, and number 9, CoinGecko. So 2, 6, and 9, all cryptocurrency websites. So very interesting that the global population is really paying a lot of attention to these cryptocurrency websites, which might give you an indication of things to come. The crypto market has been quite difficult. A lot of people are saying crypto winter, it's not going to do anything now. I would say hold on, we've only had a couple of months of red days, but that is all going to change. You know, if you're not in cryptocurrency, particularly Bitcoin, for a minimum of 4 years plus, I consider 4 years to be a short-term hold on Bitcoin and 10 years to be what you need to be looking at. And you're just going to see that volume fluctuation. It's just the way it is. We've been seeing it a lot. Bitcoin is finally in the green today. It's been a while. We've seen that. Everybody's getting euphoric. Market cap has gone up a little bit. And look now, 17,000 cryptocurrency coins. Be very, very careful out there. There is a lot of rubbish out there in the crypto markets. But we can see Bitcoin remains at number one. It's up about 2.5% today, which is nice. I see a little bit of positive movement. And then Ethereum at 3,230 US, up 3%. Let's talk about a couple of bits of crypto news that I think are interesting. This was a report that came out from Bank of America. Again, a huge bank in the US. They've been looking at the digital asset space, and they are saying that Solana, which is a cryptocurrency, could become the first, could become the Visa of digital asset world, which is, it's a pretty big statement. Solana has settled over 50 billion transactions versus Visa, the global payments giant, that has processed 164.7 billion transactions in the year ending September the 20th. That's a lot of transactions. We are talking about 1/3 of the amount of transactions that Visa has processed. And, you know, we pay attention to news like this because Solana right now is seeing a bit of a dip on its price. I do own some of that coin, not a huge amount, but you've seen this dip from, say, a month ago up here at the highs of around $203 US, now down into the 130, 140 range. So possibly a good time to pick that up, especially when there's news like Bank of America researching it and saying it could be the Visa of online digital payments. Let's talk about staking. Now, for anybody that has an interest in cryptocurrency or owns cryptocurrency, there is a method you can actually get yield from your crypto, and what you do is you can stake it. Now, sometimes staking means you lock it up for a period of time. Kind of think of it like you would lock up a bond for a year or X amount of days. Sometimes they don't get locked up for any period of time. You can remove them whenever you want. There are some, I would say, reputable companies, again, not financial advice, that do offer some good ways to get yield. I'm going to show you a couple of them here. This is one that I use here, Celsius, and you can get some pretty decent rates even on a stable coin like the USDC, which is a coin pegged to the US dollar. So it really tries to remain very close to being $1 US. You're not going to get that fluctuation. You can see the price of a USD coin right now is 0.99996, and you can just see the movement is never really going to move much over or under the price of $1 US. So every USD coin that you own, you're going to be pegged at this price. Now what you can do is you can take those coins, you can stake them on a company like Celsius, and you can get yourself 8.5% APR. So right here, USDC, 8.5%. There is no minimum amount of time that you have to lock these coins in. And I will explain the risks of what is the risk of this. Some areas to do it much riskier than others. But Celsius is a good sized company. You can see here at the top of the website, they have just gotten a $750 million funding round. So there's a lot of people that believe in a company like Celsius. And they offer staking on things like Bitcoin to Ethereum. You can see down here, if you stake your Bitcoin, so if you're holding on to it, you're going to get 6.2% a year up to a quarter of a Bitcoin, or 3.05% over a quarter of a Bitcoin. You can stake your Ethereum. Personally, I stake my Matic coins, which I've been holding for a while. It's Polygon. You can get 9.1% a year. And again, this is something that I believe in long term. So if I'm going to hold the coin, I may as well stake it. What does that 9.1% a year get you exactly? Well, you get paid out in the actual coin that you're staking. So if you stake Bitcoin, you're going to get your 9% paid out in Bitcoin, which is what we want, the power of compounding interest. We use this in our savings accounts, and we do it in dividend paying stocks. We want to get paid back in the stock. So we're earning more stocks and therefore accumulating and compounding that interest. So one of the biggest important things you can learn about investing is compound interest. So if you do want to stake your coins, there's a large array of different coins, different staking. Some ones are not very favorable interest rates. You got some down here at 0.5%, so they're really not worth it for that. But personally, I do things like Matic. I think USDC is a great coin to stake because, again, it's pegged. You're not going to see that volatility. So how does Celsius earn money? They lend out money to people. So basically, it's almost like peer-to-peer lending. You're giving money in, they're lending it out and paying you a return on that. There's other ways you can stake. You stake through companies like Anchor, which takes UST, which is Terra Luna, which is another coin that is a stable coin. You do have to watch out sometimes, like these earning rates can be very high. Look at this one, 19.56% a year. What is the risk of this? Obviously, there has to be a risk if you're getting that much APY. But all you have to do is deposit your coins into this Anchor platform. You connect your wallet in, and there's tutorials all over YouTube. But what is the risk, for instance? You're asking, well, you're getting 19.56%. Why and how are they able to do that? Sometimes you just have to look at the statistics. You see, Anchor lends money out too. They're like Celsius. They've lent out 1 trillion. Is that 1 billion? I'm getting my math wrong. 1.9 billion UST, and then they have on deposit 5.9 million UST. So this is where the risk is involved in this Anchor protocol, which I think is a good platform if you wanted to stake, but I would keep an eye on it. Now, if the total amount of borrowing is less than the total amount of deposit, obviously you have a deficit. So you have to watch out for these numbers because eventually they won't be able to pay 19% APR. That APR is going to reduce if this number continues to be out of whack, whereas only 1.9 billion lent, 5.9 billion on deposit. Obviously, you can't keep paying out an APR of 19%. That's just one example. You can also earn money on places like Binance, which is a big platform, obviously, where you can buy cryptocurrency. Under the earn section, USDT, which is Tether. It's another stable coin. You can get 7% a year. You can stake Bitcoin here at 5%, Ethereum 2.0 at 5.2%, and BNB, which is their Binance's own coin, to 3.1%. If you want to get crazy, this Axie Infinity game token, you can get 25% a year, which again, you're talking about some risk there, but you can do that also on platforms like Qcoin that has staking for Bitcoin. You can see here 2.5% for the year, so really not great, but there are some better interest rates depending on what coins you want to hold. But again, only do it if you believe long term in the projects of these coins. If you think the coins are just not going to be worth anything in the future, then staking them is not worth it. And you can also, I believe there's a piece of news that Coinbase is going to allow Ethereum staking of the 2.0 version of the coin and get yourself 5% annualized interest rate per year. Again, what is the risk of this? If you own Ethereum on Coinbase, you're moving your Ethereum regular coins to the 2.0, which is going to be the proof of stake coin, which will be rolled out probably next year when they move away from mining, turn into a proof of stake. So you're going to get a 5% annual interest on your Ethereum, which you get paid back in Ethereum coins. You're going to lock it up in Coinbase's account indefinitely until this 2.0 gets released, or until Coinbase comes out with a way for you to be able to get out of that staking. But if you're sitting on Ethereum and to moving a portion into 2.0, I don't think is a bad idea. If you're sitting on it anyways, you might as well get paid an interest rate. You can also, there's more risky coins like Phantom, which is a couple of bucks, a couple of US dollars. You can lock this in anywhere from, let's see if you look up I don't know, 100,000 Phantoms. That's a lot, but it doesn't matter. Say a little bit less than 60,000 Phantoms, you can pick your lock-in period, anything from 14 days. We get you an APR of 4.62%, all the way to a year, which is going to get you 14.15%. You can adjust that and get your rewards in Phantom coins, which if you believe in the Phantom project, sorry for not showing you this, but if you believe in the Phantom project right here, you can lock in your stake. You can lock in, as little or as much as you want. You can put in 10 if you want to, which is I think about 30 US dollars, and get yourself 14.15% for the year. And again, that's decentralized, so nobody holds your coins. Whereas if you lock it up with places like Binance or Celsius or Qcoin, then your cryptocurrency is locked into these platforms. So if for some reason they fail, cryptocurrency is going to disappear. You can also do it through Algorand directly through the wallet, which I think is an interesting way to do it. Again, completely decentralized, so you control it. You decide how long it gets locked up for, and complete control. So again, just a way to get yield. If your money's sitting around, you're like, I just don't want to put it in the bank. You can put it into Bitcoin. You can put it in the USDC stable coins and get paid for that. And these are not small coins. If we look at USDC, the market cap is $46.3 billion. This is the 6th largest cryptocurrency on the market. So these are not, what I would consider particularly risky coins. You can even look up things like Cardano. Tether is the 3rd largest coin, which I'm not really a fan of Tether. That's a 78 billion US dollar market cap on that coin. So good way to get yield, I think. Something I've been doing for the last few months because I've been holding the coins anyway. So may as well get paid back in the coins, and then hopefully in the future the prices are going to increase. Yes, be aware of the risks. There are risks involved. Usually something is too good to be true and you're getting 40-50%, which does exist out there. There's some websites that offer like ridiculous amounts of interest. I would stick to the main players if you're going to dip your toe into the market. Obviously diversify, but Celsius, I think Celsius is a good way, and definitely Binance, which is a huge platform. It's a good way to stake. You can be relatively sure that nothing funny is going to happen to your cryptocurrency. If you want to stake your Bitcoin, you get 5%. Also flexible duration means not fixed at all. You can take it out whenever you want. If you look at anything that says fixed duration, that means there's going to be a fixed amount of time that you have to put your crypto coins in there to stake. So that is what I have got for you this week. And if you find this information helpful, please hit that thumbs up. We're going to be organizing some more guests coming up in the next couple of months, peer-to-peer lending related, hopefully CEOs. I reached out to Invest and Fund today to see if we can get them on the live stream to come do a Q&A. We'll hopefully be putting that panel together. I spoke with Jan over at Blaine Network. We've had really good feedback about having a panel of 2 or 3, probably 3 peer-to-peer lending CEOs, and get them on and have them have a chat with each other about what's going on in the peer-to-peer lending market, because we need this market to survive. That's important. So if you have any questions or comment, are we going to get under an hour today? I think we might. If you have any questions or comment, pop them in the stream, and we'll try to wrap up within an hour. I will find out again Let's see if Louis texted back. Hold on. Oh, not yet. Oh, just a little stock market news. Peloton crashes 20% reported production halts. If you're a Peloton stock owner, you're not going to be happy today. Paul New says he was a winner too. Yes, you were a winner, Paul. Congratulations. That was a holiday giveaway. 6 lucky people won £30 of either Amazon gift card or Bitcoin. Alan, crypto prices are struggling to move above £32,000. Yes, this is temporary. You know, this is we've had periods where crypto's gone absolutely dead for a couple of years and then absolutely taken off. It's just part of the crypto market. Again, if you're in Bitcoin for short term, you're going to probably feel pretty uncomfortable, but if you're in a long-term investor, you're going to be just fine. John Day says Denizen is a resident of. Oh, you learn something every day. Hello, Alan. Yes, there is a big hello for you, Alan. Special hello, VIP. Sorry I missed you. Accrington is in Lancashire. Thank you for the geography lesson. Paul New, administrative fees are crazy and not mentioned when you invest. Well, you know, this is the problem. When peer-to-peer companies go into administration, nobody really knows how much the administration fees are going to be because you're out there trying to recover a bunch of loans that the administrator has no idea for the most part how long that's going to take. And I don't know if they're unscrupulous or not. The administrators, maybe it's in their best interest to drag it on as long as possible. Hopefully they're honest companies and they don't do that, but you never know. But I think when all is said and done and these administrations wash out over 4 or 5 years, you're going to see some really, really, really hefty fees in the millions of pounds on these recoveries. I really believe that. Dave Allard is here in the Midlands. AccuChat gave me a thumbs down. Thank you. Paul says you can add Zopa and Funding Circle for poor loans. Yeah. Dave, it's a shame that the FCA did not take a better look at some of these companies before they went bust. Hindsight. Plus, you know, it's very easy for a company to put on a good front to the FCA in some ways. Similar to some of the public companies that have gone out of business due to things like accounting frauds. I mean, there's ways to put forward a really glowing look for the FCA, and they probably got a little bit duped like we did. Alan Brooks is here in Middlesex. Hi, Alan. The FCA seems more concerned with restricting things rather than ensuring investments are safe. Yeah, they have a tough job. Invest22, have you decided which peer-to-peer company you're going to add to your portfolio? Yeah, I'll probably be adding one, this year. I don't know when. Whenever I see something that piques my interest. But who do I like at the moment? I like Blend. I just wish I had the capital extra to put. I want to put 10 to 20 loans in. I just, speaking transparently, I don't have the extra income at the moment, the extra capital to put 20 grand into Blend. But I like Blend. I like Prop Lend. I think Plan's going to be interesting, but again, I'll probably wait a little bit for them to get up and operational. And that would be probably who would be on my radar at the moment, unless something else comes in. Can I get an interview with Shojin? Yeah, I'm trying. FTSE is doing very well this month. Get Neil Faulkner on the channel. Yeah, actually, that's not a bad idea. I wonder if he'd do it. What's the website address for staking coins? Well, it depends what you want to do it through. I would say Celsius is a good place to start. Right here, Celsius.network. I like what Celsius is doing, and then also Binance.com. You can do it through there. I'd start with those two. If you want to get a little bit more frisky, you can look at Anchor, which is anchorprotocol.com. And then Phantom.foundation. They have a staking link in there. But start with Celsius, get familiar. Start with Binance.com. And also Coinbase in future will offer some staking. So that's probably what most people are going to look at. I wonder how the FCA can regulate staking of Bitcoins. I don't think they can. I don't think they're going to be able to regulate it. But what I think they can do is, if they really want it to be difficult, they could stop the onboarding of money going into the platforms. But the thing about crypto is so decentralized in some ways. You can hop on plenty of decentralized platforms and buy crypto. The government would have, FCA would have no involvement in being able to stop you unless they just blocked some of these websites in the UK. So yeah, would I still invest in assets capital? Yeah, I think so. I'm a little concerned about my personal portfolio being in the red so much, and I don't know what everybody else's experience has been like, but when I see a lot of defaults, I really want to ask Stuart and actually get him probably on that panel, find out what his take is on, some of these loans that are in the red. But it seems like they're business as usual. So yeah. Connective lending looks good. I'm fed up with Blaine, way too much cash drag, so I'm looking to switch to connective lending. Isn't connective lending the guy from Funding Secure? Yeah, I don't know that he was a bad guy. Was it Norman Akram? I can't remember, but maybe there were some good people over at Funding Secure. I do want to look more into connective lending and possibly have him come on here, because I don't know whether Norman would come on, because he probably doesn't want to answer any questions about Funding Secure, but he's definitely connected. So Alan says, I'm fed up with cash drag and Blend 1,000, 1,500 sitting there for 4 months. I'm going to switch. Yeah, cash drag, always a problem with peer-to-peer lending companies that don't have huge loan books, and Blend doesn't. So, I talked to Jan over at Blend. He's the CEO of Blend a couple of days ago, and what he was telling me is the challenge is this, that they don't always know if they're going to have enough money from their retail investors, which is now, not a huge percentage of their entire investment makeup. But sometimes they don't know how much money they're going to need from investors and how many loans are coming in. And it's a constant balancing act that these peer-to-peer companies have to go through. And this is why a lot of them go for institutional funding, because they know they're going to have a line of credit that is very large. So it now allows them to look at loans that they may otherwise not be able to look at. And they may be a little gun shy about taking on because they don't know if the retail investors are going to put their money into these loans. So it's always a problem. Yes, Norman, that's collective lending. Get Danny on. He has the pawnbroking behind it. Just a big equity investment from another pawn company. One thing that too I think is important to keep an eye on is when these companies, change their roadmap. So they start out in pawnbroking lending and then they start moving to property. That's when you want to be very careful. That's kind of what happened to Funding Secure. Happened to Collateral. Well, Collateral, obviously some fraud going on there. But Money Thing, doing more like pawnbroking style lending at the beginning and then maneuvering into property, and then the problems ensued. So I'd like to definitely speak to collective lending based in Southampton when you come back, maybe a visit. Yeah, I'd be interested in going to talk to them, see what they're about. Anyway, that's 59 minutes and 30 seconds. So I'm going to wrap it up. Thank you to everybody for joining. Again, if you are interested in supporting the channel, and I do appreciate everybody's support, no matter how big, small it is, whether it's just subscribing to the channel or telling one of your friends and family about the stream or the website, whether you want to become a Patreon supporter here for a very small amount of money. Anything that you do to support financial thing and its continued growth and success, I do appreciate it. And just you being here and viewing today and this evening is a big help. Gives me a little YouTube pat on the back, so that we're consistently putting out good content. So we'll be back next Thursday, 7:30 p.m. UK time, and love and appreciate every single one of you. Thank you for joining us, and we will see you, or I will see you next week. And also don't forget to join the Facebook group if you haven't already. There's a lot of good discussion going on in the Discord. Take care. We'll see you next week. Bye.